Ladies and gentlemen, it just happened hours ago. China's Lehman moment has just begun as Evergrande has officially filed for bankruptcy in a US Manhattan court. I tried to warn people about this in late 2021 and early 2022 that China's property market was a complete Ponzi scheme. And remember, China's property market is the biggest in the world. It's valued at $42 trillion. It's above the US. US and China have the two most expensive property markets in the world, but China's the biggest. Well, guess what? The biggest source of wealth for China, which is the second biggest economy in the world, has just been evaporated. And like I said, this is not me trying to be hyperbolic, trying to be over the top. It has officially begun. This is China's Lehman Brothers moment, and it will cause a global financial crisis. But ladies and gentlemen, guess what? That's just the tip of the iceberg. There is much more going on in China that's going to have massive consequences for us throughout the world, especially here in Australia, but also the US as well. So everyone, what just happened with Evergrande? How bad is it in China? And what does this mean for all of us? And how can we prepare or even profit from the situation? Well, that's exactly what I'm going to get into in today's video. So let's not waste any time, ladies and gentlemen. Let's get straight into the news, the facts, and the data. Well, look at this, everyone. Like I said, it has officially begun. Investors fear China's Lehman moment is looming. Well, ladies and gentlemen, it's no longer looming. It's right at our doorstep. Because look at this, everyone. This is absolutely massive. I cannot emphasize enough how bad this situation really is and what this is going to mean for the global economy. Look, China's property giant Evergrande files for bankruptcy protection in Manhattan court. But people, what I'm about to reveal may shock you. It's actually much worse than this. Now, for all of those of you that haven't been following this Evergrande saga for the past 2 years and don't know who they are, well, they're the largest developer, or one of the largest developers, or should I say, were one of the largest developers in China, and they had over $300 billion in liabilities. This has caused contagion throughout the whole property market in China, and especially with developers, and has caused a real estate market collapse, especially with developers and builders. But China's been trying to cover it up. But now that foreign investors aren't getting paid, well, don't listen to the data that China's putting out, because we can't trust that at all. Simply follow the money. Because again, the world's most indebted property developer defaulted in 2021 and announced an offshore debt restructuring program in March. Trading of Evergrande shares has been suspended since March 2022. Now, for those of you that don't know what Chapter 15 bankruptcy is, it's protection that allows a US bankruptcy court to intervene in cross-border insolvency case involving foreign companies that are undergoing restructuring from creditors. It aims to protect the debtor's assets and facilitate the restructure of the business that are in financial trouble. But again, people, it's not just Evergrande, and this is having massive domino effects. TNG Holdings, an affiliate of Evergrande, and its subsidiary Scenery Journey, also filed for Chapter 15 protection in Manhattan bankruptcy court, according to the filing. So okay, we do know this is China's Lehman Brothers moment, but how bad exactly will it get? How can we prepare for this economic hurricane that's about to hit? Well, first things first, it's going to cause a property sector fallout. Now, again, like I said, China has the biggest property market in the world. It's even higher than the US, so we're all going to feel this. So Evergrande's filing comes amid contagion fears that China's property sector could spill over to other parts of the economy, which has already seen flatlining growth. Now, like I talked about in my previous video, Country Garden, which used to be one of China's largest developers, struggled to make coupon payments on US dollar-denominated bonds and issued a profit warning. So you're starting to see how interconnected the global economy is, everyone. And remember, what did BlackRock just do? They've been investing heavily in China over the past few years, so they're definitely going to take a hit for this, and also US investors as well. The firm has also suspended trading in at least 10 of its mainland China traded yuan bonds, according to Reuters. Now, why we should be so worried about this is because if China's economy starts to crash and the yuan keeps on crashing, they may be forced to sell US government bonds and treasuries to buy up their currency and also try to save their economy. And guess who's the second largest holder of US treasuries and bonds? That's right, China. Look at this chart here. We can see Japan is the biggest holder. They have 1.1 trillion, but China comes in second at 868 billion. Now, I don't know if you've been watching the bond market lately, but it's been tanking and tanking hard. And what caused the stock market crash in October 2022? Well, it was when the 10-year US Treasury yield hit its peak of 4.4%, And I think if the 10-year US Treasury yield hits 4.5%, we're going to see another stock market crash, or at least a correction, because the returns are going to be decent with the 10-year US Treasury going positive if inflation falls. But that's not all. What happens when your credit rating gets worse? Well, you have to pay higher interest. What just happened for the US government? They got their credit rating downgraded. What's about to happen for a lot of major US banks? Well, they could also possibly face a credit downgrading as well. So we're going to see yields on the 10 US Treasury continue to rise. And remember, it's not so important what the Federal Reserve does with interest rates, it's more about what happens with the bond market. The Federal Reserve could not lift interest rates at all, but if the 10-year US Treasury goes from 4.3% to 5%, we're going to see a massive stock market correction or crash. So okay, we know China's real estate market is in big trouble, but do you know what else is in trouble? China's banks. And when you combine China's real estate market and their banking sector, well, that's nearly half of their GDP. So if these two industries go down, China's economy is going to completely collapse. Because look at this, everyone. Again, this is not me trying to be dramatic. I want you to know how serious this situation is. Chinese banks challenged as economy wobbles and property market woes mount. Because what you have to know about in China is they have a huge shadow banking industry worth $2.7 trillion, like I went over in my previous video, and this industry is facing collapse as well. So China Construction Bank Corp, Bank of Communications Co., and China Merchants Bank Co. may face heavier provision burdens in the second half of 2023 and early 2024. After the developer Country Garden Holdings Co. failed to pay dollar bonds on time. So what you have to know is it's not just foreign investors aren't getting paid, also their domestic investors, and more importantly, their domestic banks, they're not getting paid either. So again, this is why you can't believe these reports that are coming out of China saying their GDP is booming 5-6%. It is not happening, people. Look at the money, follow the money, and you'll find the truth. And what did I say earlier? BlackRock's been a big investor. Well, global investors including BlackRock Inc. and Alliance SE have recent exposure to bonds as well. Now, if you've been living under a rock, or should I say a BlackRock, and you don't know who they are, well, they're the biggest hedge fund in the world with over $10 trillion in assets. So if they take a big hit, we're all going to feel it. The banks also faced scrutiny after embattled shadow bank Zongrong International Trust Co., I guess they lost their trust here, missed payments on dozens of products and plan to restructure debt. The liquidity challenges underscore how property sector troubles and the weak economy are gripping the financial sector. But guess what? There's about to be a lot more pain coming. So exposure to local government financing vehicles and a deflationary economy is compounding the pressure. And I know what you're thinking, wow, Michael, that's pretty bad. It couldn't possibly get any worse than this. Well, unfortunately for China, it just did. They just got dealt a massive blow that is going to hinder their growth for decades. So look at this, everyone. Biden bans range of US high-tech investments in China, citing national security risks. So make no mistake, everyone, the West is in a cold and economic war with China, and it's going to absolutely cripple their economy. But just like putting sanctions on Russia, we're going to feel the consequences as well. Even though I think it's a great thing to de-risk from China, what this could cause is a lot of companies leaving China, and they're going to have to go to more expensive alternatives for their manufacturing, or at least it's going to be very costly for these firms to rebuild in another country, maybe for example like India or Vietnam, etc. Because what you have to know is the only reason why the global economy has been doing okay over the past few decades is because the great, what they called economic miracle, which may turn out to be an economic scam of China. They've created huge, immense wealth of trillions and trillions of dollars, and they've been splashing their cash around the world. All that free money, or that money printer of the property sector in China is going to be closed. And this will have consequences for a lot of real estate markets around the world that rely on a lot of rich Chinese investors coming in and buying up property. So everyone, I know what you're thinking, well, okay, what does all this economic jargon mean for you in simple terms, and how can we protect ourselves against a great financial crisis? Well, everyone, what this simply means is this is really, really bad. China's biggest developer, and also their second biggest developer, and pretty much all their developers are going to collapse. They're going to go bankrupt. Their real estate market, unlike their reporting, is collapsing. That is the biggest global real estate market in the world. This is going to cause a financial crisis domestically in China. Remember, they're the second biggest economy in the world, so this will have domino effects and contagion effects throughout the rest of the world. world, BlackRock could take a big hit, and a lot of property markets around the world, like I just said, will take a hit as well. Now, when you study history, economics, and market cycles, the only way to protect yourself against a global financial crisis and, financial Armageddon is gold and silver. They've stood the test of time no matter what has happened, no matter what empire, whether it be the US or China, has risen or fallen, it has stood the test of time and will continue to do so. That's why I'm continuing to add to my gold and silver stack throughout these hard times and also these uncertain times as protection against this. Now, this doesn't mean it's going to boom 50 or 100% over the next year, but unlike the markets that could possibly crash 20 or 30%, you won't see gold go down that much. But everyone, what do you think about all of this? Let me know down below. Now, for my loyal viewers and subscribers still watching, you're awesome. Thanks for watching. I'll see you all in the next video.